All right, welcome everybody. This is Tesla Today. I'm very excited about today's topic. I want to know, and many people have been asking, does Tesla still have room to run? We're going to look at the broader stock market and ask the question, why is seven stocks making up the vast majority of these gains? So we've got Jeff Lutz with us today. Jeff is a consultant for one of the top 500 big cap companies. And he's somebody who follows the stock market very closely. We've been having him give us advice and explanation for what's happening with the economy. He also invests in the broader stock market, but also plays with stock options. So he's a great guy to kind of explain to us what's been happening. Thank you so much, Jeff.
Great to be with you.
Awesome. Okay, well, let's get going. So here's a great article that I found from Financial Times, which is quite recent in June, just very recently this week. And they explained that the big tech stocks race ahead of the wider market. So this is the year-to-date performance from January to June. And you can see that seven stocks, NVIDIA, Meta, Tesla, Amazon, Apple, Alphabet, and Microsoft. This is their gains from January up. And we'll see it's 40% to 150% gains. But if the S&P 500, that little gray line there, looks pretty flat. What's going on here, Jeff?
Yeah, I mean, I think, there's just been a lot of rotation in the market. Number one. Number two, these stocks were beaten down dramatically. I mean, probably way beyond what they deserved, coming in the end of last year. And the third thing is really the market was clearly offsides coming into 2023. The kind of the consensus view from fintech was first half is going to be rocky. We're going to retest the lows in the S&P and the NASDAQ. Second half should be better. How? I don't know why. They had the recession pulled forward into the second quarter, which would have been now, which we're clearly not in a recession. Depending on, I mean, there's economic weakness and there's also strength, but there's no consensus measure that we're in a recession. So when you have fintech offsides and you have this massive drawdown at the end of last year, you had the tax loss harvesting and all these different factors coming together. It does kind of work together in terms of having an explosive rally potential coming into the following year. But a number of things had to happen. One of the things was the economy and the folks that follow the economy have to believe that if we're going to have a recession, it wasn't going to be deep, number one. And number two, if we're going to be in kind of a low growth, stagnant mode, that some of these, mega cap tech stocks may be the place to go and hide, because they do have the potential to be, to grow again and to be high growth stocks. So it's a little complicated, but it just mostly the market, offsides, and the recession fears have pushed out. Not necessarily gone, but there's a lot more. Everybody that was coming on TV in the beginning of the year was recession. When is it, basically trying to time a recession. It was a foregone conclusion. And now you hear a fraction of the people talking about a recession now on TV.
Yeah, I remember in January, late January, when they came out with the numbers of S&P gains, you were already telling us, you were telling me that actually there's a stat that says whenever January happens, it almost happens for the rest of the year. And I know
Yeah,
this is just kind of stats, but
right.
it's playing out, except, like you said, it's kind of weird. These seven stocks are the ones doing it, not necessarily yet the S&P. The rest of it, maybe we'll see what happens. Very interesting what's going on. So this is part of that article said the performance of the S&P 500 index is now the most concentrated it has been since the 1970s. So this is very unusual that it's very concentrated on these seven of the biggest constituents. And they've ripped higher, gaining between 40% to 180% this year. And the remaining 493 companies in the S&P 500 are in aggregate flat. So a nice way to look at it is this table here. You can see that these seven companies make up a really big chunk of the 500 companies in terms of their valuation. Here's another one. This one's older. This is in May, 3 weeks ago. And just bottom 93 is 16%. And all the rest, this is market caps. This is in terms of, the worth of this 4 trillion. Oh, I'm sorry. This is the gain. This is the gain
Right.
since year to date. And so year to date, it's 4 trillion in market cap. Where's this money coming from, Jeff? Are you're saying that people aren't realizing they've been beaten down the last few years? They're ready to pull out. There's FOMO, right? They don't want to miss out, and they're throwing
Yeah.
their money on the top seven.
Yeah, and the other thing is the AI narrative that really ramped up, in the
Right.
first half of this year is the other thing that really got pushed into this. And this money is coming off that there's a lot of money on the sidelines. First off, when we looked at the 13S from the institutions in Q1, they clearly went after um, they clearly went after mega cap tech and AI. And it was Google, it was Nvidia, Amazon. They
Yep.
clearly re-entered those stocks. And what you saw with was interesting, and we'll get in a little bit more with Tesla, is that it was kind of, there's this lead up into Investor Day, and then there was kind of you know, been a couple of peaks, a couple of attempts for Tesla to technically break through its 200-day moving average and actually failed. And it didn't succeed until we actually got out of the shareholder event in mid-May, and then the announcements and the partnerships occurring. That's where kind of Tesla got its rocket fuel. So Tesla entered a little bit later than the rest. It was having a pretty good year. I mean, to start where it was. But again, we've talked about this. Should it have ever been down that low? But it was having a decent year, but it was having nowhere near the year an Apple or Nvidia was having. And now, after that shareholder event and then the partnership announcements and Elon on this world tour, right? Getting our relation, reaffirming the relations in China, meeting with key leaders, regulatory, commercial. I'm sure talking about expansion. There's also many expansion announcements for Shanghai in terms of motor inverter production, battery production, mega pack. So, but yeah, I think all of these stocks have really, they've had this nice run up, and it's not necessarily say that they're just going to we're going to rotate out and we're going to go to something else. I think the climate is right now for them to continue to do. You have to think like, well, what would actually, besides just taking a technical breather, meaning like it's run up this much, it's RSI, which is basically um, a calculation of how quickly the average price has moved up. It may take some of these stocks may take a technical breather, but you have to ask, like, is there something fundamental that would cause them to take a deeper breather? Because these companies have also been undertaking cost reduction actions to shore up their EPS. They've been buying their own stock back. That's the other thing. Meta, Google, Apple,
Mm.
massive, massive, biggest in their kind of company history, stock buyback. So there's some financial engineering going on here as well. And then, of course, with Nvidia, you have them basically inter-quarter raising guidance for the current quarter by 50%. And I've talked about this with the people. You know, their order book lead time, they have, I mean, minimum of 16 weeks, probably 18 to 20 and more based on the different component type. So they had a pretty good understanding of what their Q2 was going to look like, way back in January and even before. So I think they played it right. Really good financial engineering, very good results too, and they've been able to improve their supply situation. But all in all, this is a big move in the first half. But fintech was offsides. These companies are performing. They probably hit their trough earnings, and moving ahead, they're not going to be massive growers again, except for Nvidia and Tesla. They're probably not going to be massive growers, but they're going to be kind of steady hands, to be in.
Okay. Wow, you said a lot there. And I think we can reserve the conversation a little bit because I
Yeah,
really want to do a deep dive on Tesla because you said all wonderful things that Tesla's doing, and yet it doesn't seem to have grown as much as the other six. It's funny that I'm definitely going to
yeah,
compare this to the other six, uh, although it's doing amazing against the Nasdaq in general. But let's step back and let's continue the conversation about
yep,
what's happening at the market overall. Then we'll do Nvidia. Then we'll do individual stocks, and then spend a little bit more time on Tesla to see what is happening, a little bit more nuance. You've already said a few things, but let's dive
Yeah.
into that. So just at the high level again, just explaining again that it was these seven stocks that drove the gains since January. But just to look at this table, which shows that the returns, it's primarily the big blue purple bucket bubbles, which is the tech. And then the purple one is communication services. Those are the ones that have the greatest returns. The rest, consumer discretionary and consumer staples, and all these other little tiny ones down here. So really, it's super concentrated into tech and communication services, not only to these seven companies, but the fact that they are almost all tech and services, consumer communication, I meant. Okay. Um, this is a statement from Goldman Sachs that they're much more upbeat now. They think that this month it lifted its target for the S&P 500 for the end of this year. And they're now forecasting that it would reach 4,500, a 12.5% increase from its previous forecast. That's a big gain, increase. Um, if the bank is right, this will be one of the strongest years for the index of the past 2 decades. Whoa. So they're really now upbeat. And part of the reasoning is that the previous episodes of intense concentration since 1980, the broad market performance has been tricky, with stocks often trading sideways for long periods, suffering unusually large declines. Eventually, however, a catch up has been most common outcome. So they think that okay, this is they're saying that these seven are rising ahead, but that won't last, and eventually the rest of the S&P will catch up. And so now they're thinking this is crazy. The strongest years for the index of the past 2 decades. Would you have guessed? Who would have guessed that this is what the sentiment is now? That it's actually going to be a boom year this year versus like a few months ago. It was like the world is ending.
Yeah, and sentiment is a lot of this is sentiment and momentum as well. Sentiment was, I mean, one of the all-time lows last year, right? You had
Yeah.
geopolitically, you had a war erupt. You have these tensions between China and Taiwan. You have obviously the predictions of economic recession. You have inflation increasing. Remember a year ago, this month, I believe this month or last month, inflation was roughly 9%. Um, the headline inflation number was 9% in the US. So you had ramping inflation, you had uh, almost certain predictions of recession, you had the geopolitical issues occurring, and you were having some earnings misses too. You started seeing some of these titans struggle a bit with earnings. So when you kind of mix all that together, sentiment gets really pulled down. You have the market. I mean, where is that? S&P was at 4,800. You have it pulled down all the way to somewhere. Intraday I think it was 34 and change. I think 3,600. I mean, these are gigantic pull downs or drawdowns of the market. The Nasdaq, I think its all-time high was at 16,000. It pulled down to just over 10,000. So these are, when you have a year like 2022 and you have sentiment like that, you have these large CEO figures, Elon, Bezos, others who are, have made big moves with their own equity holdings as well as with their companies, and Bezos stepping, away from Amazon. You think of the timing and like, well, what are these titans of industry doing? What are they saying? What are they doing with their own money? And a lot of people tend to look at that and follow. So you have all these factors coming together. It just goes to your point, Herbert, of like, who would have thought that 23 would be like this? But then when things are that bad and there's this consensus view of like how 23 is going to play out, it's going to be terrible in the beginning and it's going to be better later. That's usually where there's some dislocation that occurs. And and I think that's what we're seeing right now. And just again, it started with being offsides with mega cap tech in the beginning of the year, and then all of a sudden there's earnings in January and they're not as bad. When they reported the earnings reports in January for the fourth quarter, they weren't as bad as everybody thought they were. They weren't great. They weren't, lighting, setting the world on fire. and then they had first quarter earnings in April, and they weren't so bad. So this whole prediction of an earnings recession, again, these earnings reports are against lower, um, you know, lower guidance that they gave, so they all reduced their guidance. But there wasn't this gigantic earnings recession of like everything's going down, everything's in bad shape, and everybody's missing. Like, well, if that would have happened in April, then you would have seen that rally die, and you would have seen, you know, maybe a bigger correction. So
Yeah. Okay. I got to stop
mm,
myself from talking Tesla because we're going to get there. We'll spend some time with Tesla. But I'm telling you, it's like a slingshot, right? It's been held back for a year and a half, but yet all these milestones are being hit. It's going to run. I believe so. And we'll talk about it if you agree with me or not. Let's go back to what's happening to the broader market, and then we'll go individual stocks. So this is the estimate today. This is the sentiment now. So the bank, which is Goldman Sachs, said that they view that there's now a 25% probability to a recession over the next 12 months. Um, yeah, that's very low compared to 65% estimate by the median forecaster. Also means it thinks a catch up is more likely than a catch down. So yeah, what's your thoughts on possibility of a recession?
I mean, I think one of the problems with this, with it's a great question, but one of the problems with the question in isolation is, what is a recession? How deep is a recession?
Mhm,
How long does it actually
mhm,
last? If it's very quick, if it's very shallow, it's not, is not as big of a deal as some kind of make it out to be. So it depends. I mean, right now, what's interesting about the Fed is has forecasted somewhere between like a 0.75 to a 1% increase in unemployment by the end of this year. So just by that prediction, they're actually predicting a recession, because anytime unemployment increases by that magnitude,
mhm.
it's usually followed by a recession. So we have, first off, the Fed has shown no ability to forecast
Yes,
jobs and rate of inflation or the Fed funds rate. And
yep,
I've gone through the metrics before on that.
yes.
Um, so so anyway, I think Goldman. I mean, this could be the call. First off, there's only one or two counter trend calls last year going into this year. Counter trend meaning everybody was like S&P lower, way below 4K or some really low number versus the prior year. And there's only a couple of counter trend. I think it was Fundstrat, Tom Lee, and I think Deutsche Bank maybe, or I don't want to name the other bank, but there's only one or two counter trend predictions on the year, and everyone else was lower. So Goldman's now
Yeah.
on that train. I think others are increasing their estimate. And again,
Mhm.
just when you have a lot of people and a lot of money off sides, these analysts, these hedge funds, they get they get in trouble when they actually miss a rally. They don't get as in much of trouble if they experience, a decline, and like they're a little bit more heavily invested. They get in a lot more trouble if they miss a massive rally. So you could have a lot of chasing going on. You could have short covering happening. There's a number of things that could be spurring these mini rallies. You could also have a pullback here. I mean, technically,
Mhm.
when you look at the chart, we could be due for a small pullback, but
Mhm.
I still think the trend is going higher.
Okay. Thank you for that, Jeff. So we've had a good discussion of what's going on in the economy. You gave us an overview of what's happening with Nasdaq and what you think is going to happen for the future. Let's go dive into Nvidia, the topic of the month. Everybody's got Nvidia in their minds. So this article said the chip maker Nvidia, riding the wave of investor enthusiasm over artificial intelligence, and then, like you said, they gave revenue guidance for the upcoming quarters, and that just made the thing take off. And so it gained $640 billion in market cap just this year. That's almost
Right.
as much as a combined market worth of JP Morgan and Bank of America, the two biggest banks in it. Isn't that almost the market cap of Tesla?
Yeah, and if they grow into it, I mean, that's the thing. When it ramped, and then all of a sudden they guided higher, um, they were essentially not more expensive than they were prior to their guidance, meaning this whole run up into earnings was deserved. And you know, this is where all these opinions come in of like what should a forward PE be? What should the current PE of a company be? And my answer to that is there is no one answer. You have to look at growth. You have to look at the fundamentals of the company and what they're doing and what they're disrupting. If you just it by the way, the stock market would be easy if you can just go rank companies by PE and buy them. You'd buy the lowest PE companies but that's why you got to look at growth and you have to look at the fundamentals. So Nvidia, remember this story has changed. And I've been an investor in Nvidia for a number of years. I'm just to disclose, I'm not invested currently. But for a number of years, I've been invested in Nvidia, and there's just a number of different stories. First, there's a gaming story, then there was
Mhm.
a crypto story, then a big data
Mhm.
center story, and it's always kind of been this story stock. And I actually first met Nvidia. We When I was at Motorola, we were integrating them into a smartphone,
Mhm.
um, uh, on the GPU side, and really to use more processing capability. This was kind of be one of their first entrants into the smartphone side. And I met them and the team at that point in time. This is probably 2008 or nine. And anyway, this company has just grown. Again, it's been multiple stories over the number of years, but the latest story is AI. And I think a lot of people were caught off guard. They've been hearing the word AI. They've been hearing that.
Mhm.
They've been seeing Jensen Huang get up on stage and talk about all the work that they're doing and the impact it's going to have. But then there's this Chat GPT moment in November, and this thing went, the fastest thing to a million subscribers. And they're like, okay, what's powering all this? Well, it's in, NVIDIA H100s. And all of a sudden they're like, okay, how much are those? And how many does a company need to make a large language model? And they're like, holy cow, they're going to
Mhm.
sell a lot of product. And then this stock was what, 100 and, $100, $120, I think in the third or fourth quarter last year.
Mhm.
So, that's the story of Nvidia. I think massive dislocation. The story has changed. When it flipped to AI, people were off sides. Again, the market sentiment was very low, just in general, especially for the high flyers. And it just took off. And the word gets out. I mean, they can't keep their order book. They can keep their order book under wraps, but I mean, the word gets out in terms of like, what are people buying? Who are they using as partners? And I think that's the kind of the wave it rode throughout the year, and then they cemented it in May when they gave their guidance, and they elevated their guidance from 7 billion of revenue to 11. Like, who does a 50% increase, right, in there or
Mhm.
more in their current quarter earnings guidance?
Yeah. I'm a believer. I've been saying that AI is obviously a massive business. They actually are deserve this. And I think Nvidia will become one of, you know, bigger than Apple, maybe. There's a real potential for it to be because, like I said, AI is something that every company needs and they need a lot of it. Um, we'll talk about whether or not Tesla can actually, offer some of these chips as well. Um, but it's interesting. Obviously, they deserve it. I think they went up this high, but it's so this tweet from Farzad just yesterday. He said, "How do you pronounce Nvidia?" Nvidia 74%. Of course, I don't know why he even said this. Pretty straightforward to people. Nvidia, something else, see results. Okay. So he said that. But what's interesting is Elon actually replied to that and he called it envy idea. He's so
Yeah.
smart. Envy idea. I have a little envy. That's so brilliant. Can you find it? Envy on the idea. I have a little envy to be honest. So like a envy idea. I sat there and I tried to do the same thing, and that did not come to my mind.
Yeah.
But when you saw this tweet, you were telling us you think there's something a little bit more to this.
Well, I know the relationship between the two is one of mutual respect and great respect, actually. And um all I'll say is that when you start, I think this is, I always look for dislocations as an investor. I believe there's a dislocation occurring and most people aren't noticing it. Okay. In 2018, Tesla separated from NVIDIA and started designing their own silicon for
Right.
their autopilot computer.
Hmm.
And they assembled a team. They assembled some of the best chip designers literally available in the world. And they've built that team up. And so they're doing silicon design. They're doing the hardware silicon design. They're doing all the software. They're doing all the simulate. They're doing everything in house in Tesla, and then they're releasing it to a fab like TSMC or Samsung, for example, for fabrication and mass production. That's what NVIDIA does. NVIDIA does silicon design. NVIDIA does that layer one that does software for it, and they release their designs to TSMC or maybe Samsung, but they're actually mostly TSMC. They get them fab, they put them in production, they sell them to customers. So I don't think a lot of people are actually aware of. I don't think common investors and common analysts are aware that what NVIDIA does with AI chips to do all of this processing, do all this. By the way, Tesla did their own chip. There was an NVIDIA
Hmm.
chip available for them to use. They believe they needed better performance, and they went side by side in terms of the performance gains that they were getting with their chip design, with Tesla, with their chip design versus the available solutions from NVIDIA. And NVIDIA didn't just show them what's available commercially; they showed them their roadmap and what's available in the future. So Tesla saw NVIDIA's future roadmap and said, "Wow, based on what we need for driving, we're the self-driving experts, we're the auto experts. We're the computer vision experts. This is what we believe we need." Assembled their own team, designed it, fabricated it, pretty fast time too. And now they're on their, they're doing their third rev, I believe, of it now. And I just don't think people realize that Tesla designs AI
Yeah.
chips and AI software, and now is doing the data center aspect and the silicon aspect for Dojo, similar to what NVIDIA is doing. I don't think people realize that.
Exactly. Okay. I can't stop myself. We got to talk Tesla.
Yeah.
You're absolutely correct, right? This is hilarious because, Nvidia is Tesla's using Nvidia's computer, their superclusters, for the fifth largest supercomputer in the world, and they're using it for FSD. But they're creating their own Dojo, and they had to create their own, like you said, because they felt that uh, Nvidia was designed for games, and they started to kind of modify it for AI. But what they needed was a purpose-built machine learning AI chip, and that's why Tesla's doing this. And so they believe that they're going to be better than what Nvidia is doing. And I think by all accounts from the experts I've been talking to, that this is, what Tesla's doing with Dojo is because it's so purpose built for machine learning, it's going to be better. Now we can't make that claim yet, but it's like a very big potential that that's the case. So it's very, very interesting that Tesla is not even being, it's not even part of their valuation right now when you've got Nvidia. Now, Nvidia's selling it to customers, and so they deserve that. But if the moment that Tesla says they're selling it too, now it's we don't know if they're going to have the capacity because they need all of it for themselves. But that's what he meant by Dojo as a service.
Oh,
And if
they'll
he can offer
absolutely
Dojo
have the
service,
capacity. Yeah. I think they will have the capacity.
they will.
If it's silicon supply, they'll have the capacity. On the dojos on the network side, I agree that remains to be determined. But on the silicon side, if you think about it, Tesla has the number one AI chip in the number one selling car in the world. There's no
Mhm.
one car per
Yeah.
quarter that sells more than the Tesla Model Y. And the auto chip, the autopilot chip and the auto chip that's inside of that car is a Tesla designed AI chip. So the number one AI chip in automobiles, the number one, in the number one SKU is the Tesla autopilot chip. I just don't think this is commonly known. And all Tesla has to do is continue working on this, advancing it and maturing it for their own products, get to some level of maturity, right? It doesn't have to be full robo taxi. Um, we can see the progress that FSD has had throughout this year just alone. Get it to some level of maturity. Companies would be smart to get in and partner with Tesla now versus when this thing is like fully production ready and released, because the price is just going to go way up. The other thing is, when Nvidia is designing, Nvidia has an automotive unit inside of their company, but Nvidia does not build and ship cars. And there's a big difference when the people on Bannon's team who does a chip design for Tesla can literally walk down the hallway and talk with the safety and reliability team of like, hey, what kind of recognition do we need on this sensor, and what kind of latency do we need on this? And they all have Tesla emails and they're communicating back and forth. But imagine Nvidia's auto unit is doing that, and they're doing it for they have 15 different customers they're shipping silicon to, all the different Chinese customers. Like all those customers are just getting whatever Nvidia thinks they should get. Whereas
Right.
in Tesla, that solution is designed, to function and work end to end, and they're all under one roof. I just don't think people understand the power of this. I've seen this in other examples back in my history and my career when you can vertically integrate something like that, the power of it. Because I believe they'll be able to get the market more quickly with something that's actually scalable, and then others can buy it. I think this whole thing of going out to all these customers and then doing all this testing in parallel, I just don't know how they get to a common spec set the way NVIDIA is approaching it. I mean, they have very smart people there. I'm sure they'll figure it out. But this vertically integrated approach from Tesla, I think, is powerful. And I think most analysts
Right.
don't realize
Yes.
Tesla designs an AI chip, AI software, and sells it in the most popular model in the world.
Yeah. Okay. This makes me remember when it just feels like out of the blue, Elon just brought up this idea that Dojo as a service could be pretty massive market potential. It felt like it was
Mhm.
out of the blue, like it wasn't even part of the conversation. All of a sudden, he just blurted it out. I think there's more to it than we realize, but he did caveat saying if this works. So it felt like that caveat was pretty strong. He didn't know yet. He wasn't that confident yet, but he goes, if it is, it's gonna be massive.
But what did he come back to Tesla to do? I mean, when I say come
Yes,
back,
yes,
what
yes,
did
yes.
he recommit
Don't say
himself
come
to
back.
Tesla to do?
That's right.
AI. He's
Yes,
like, this, I want to see this through. And
exactly.
so he is going to be the chief engineer,
Mhm.
dojo,
Yeah.
hardware, software, what's going
Yes.
on in the car, FSD. He wants to ship AI in
Yeah.
production and mass scale. And really one of the more difficult applications. This is not a language model prompt. This is, a couple tons of steel and aluminum moving down the road. And if we can solve auto collisions and meaningfully make that number lower, what a massive accomplishment, not for AI and for Elon and his team. So he's back at Tesla. He wants to ship more cars, right? He's focused on scaling EVs, right? But
Eh,
he really
Jeff,
wants to solve AI.
no, he's beyond that. For all accounts and purposes, FSD is actually solved in his mind, right? They've already got the neural nets. It's already learning. They've shown that it's already improving at a rate that it needs to improve. He's talking about real world AI. This is the ability to understand the world through vision, be able to
Yep.
know what they're looking at, being able to know the context of it, and then being able to manipulate it. If you have bots or other, or like a car, you can actually interact with the real world. No one is doing that. Everybody's doing generative AI where you type in some words and something comes out
Right.
versus is text or vision. They are going to do this. Tesla's going to do this. He's going to do that. But the harder part, he said, is real world AI. So one of the solutions is driving. But when you solve it for driving, you need to know that that is a dog and that is a horse. That's a street light. That's, it understands what it's seeing. And just recently, right? Like we've seen it evolve into actually knowing that this is a human pushing a shopping cart versus a human pushing a baby carriage.
Right.
Or I've seen now that this Tesla FSD can recognize small dogs and big dogs, and so that's what this is doing, and driving is just one part of it,
Right.
right? It's crazy. So I do think though that Tesla's going to, like you said, thank you for reminding everybody that he's here at Tesla to make it become a real world, and then he said general AI.
Mhm.
So this is a tweet that came out just a couple weeks ago. This guy named Adam D'Angelo. That name sounds familiar. um, One reason the AI boom is being underestimated is the GPU TPU shortage. This shortage is causing all kinds of limits on product rollouts and model training, but these are not visible. Instead, all we see is NVIDIA spiking in price. Things will accelerate once supply meets demand. So, NVIDIA currently today is one of the only folks being able to create these chips, but that won't last. Here's Elon replying, true. Many other neural net accelerator chips are also under development. NVIDIA will not have a monopoly on large scale training and inference forever. Ooh, I have heard him say that companies like Google and the others, Meta, they're all working on this too. Microsoft. So while they're buying Nvidia today, they may not rely on Nvidia forever. But does this also kind of hint that maybe Tesla? He's saying that because
Yes.
obviously he could say this because Tesla's already creating neural net accelerated chips, like you just mentioned 10 minutes ago, and so this is saying that we're going to sell this too.
Yeah, if you take this from top to bottom, there is a shortage right now, and NVIDIA has said that it'll probably get healthy, by the end of the year. It just shows you the demand for this and how the demand is growing rapidly. But they are in short supply right now. But Elon would have visibility to this not only with his own efforts, which is what I believe he's referring to, but also all the other. There's a couple of other vendors in this space that are working on this hardware. So, um, but there is a general shortage, and there isn't the other vendor that's working on this in this space is also using it for their own purposes. So we'll have to see how this plays out, but I do think he's kind of hinting at there'll be more than one place to go to do this and to do this work. I think it's important. I think it's important to own, the hardware and the software kind of from that base layer of silicon all the way to the solution you're shipping, because then you can optimize it for those use cases. So sometimes it doesn't make sense, but I think in this situation it will, and there will be definitely more than you can't have this monopoly right now. This is the other thing: Nvidia's gross margins are over 70%, 70.
Mhm.
And by the way, that is part of the equation of why Tesla designed their own AI chip. It's not just this is the performance we need. I believe that was one of the leading drivers, but you can't get the unit economics and the scale you need in auto if you're paying somebody 70, 80, maybe 100% gross margin for that autopilot computer.
Yeah. Okay, well, this is Tesla's version of AWS, right? They built something for their own purposes, a supercomputer, chips. Now that they've got it, they can leverage what the resources they built and sell it to others. And so a concept that I've been understanding more and more in the last year is this idea that if a company, because it applies to, let's say, bots, right? If a company like, let's say, Boston Dynamics and others create their own bots, they need to have the resources, the staff, the intelligent people that they need to hire, the factories that they need to build, all that to just even create the parts. But when you've got a company like Tesla who's doing it for other reasons and other businesses, this is like a little rounding error to their cost to build. And so it's just completely, it's like an unfair advantage that they have, that they can build this thing and then they can now sell it because they already have it. And that's what this is too. NVIDIA is doing all of this as a standalone business. They need those 70% gross margins. And so if Tesla does this, and if they have the ability to sell beyond that, they could either get the 70% gross margin or underprice them because they're using it for themselves. And the cost to build it is their data center, their supercomputer, just that alone, you know. Um, okay, let's talk valuations. So this is the valuation for the S&P 500. These seven big seven. You can see their PE ratios here. This is the forward PEs. Thank you. I'm glad that they're looking at forward PEs, but you can see that the big seven is much further than the rest of the S&P 500. I mean, this makes sense, right? Doesn't this make sense? I mean, these are tech companies. They should have higher PE ratios. Um, that makes sense. So let's Apple is, but this this just shows just how grossly just how different it is. So Apple's worth more than the entire Russell 2000 of smaller U.S. companies at this point, based on market cap in trillions. Yeah, Apple's the red, and they just kind of like crossed over finally more than the Russell 2000. And then the valuation ratio, now we should have put this last, but Tesla's PEG ratio is only at 1.28. This is with the rise already of the PE ratio now at 70s instead of the 50s.
Well, the
Um,
forwards and yeah, the forwards looking better for
exactly. Look at
24.
that,
Yeah.
man. Gee, every time I hear somebody tell me that the Tesla's PE ratio is at 50 and that sounds right, I'm like, please stop looking trailing. Look forward. This is
Well,
28.
the other thing is these
Yeah.
numbers will move around. I pulled these this morning. They may be
Yeah.
34 tomorrow. I mean, they'll move around a bit, but the point is the PEG ratio takes the profit earnings, that PE ratio, and divides it into growth. And Gary Black has done a really good job, um, representing his shareholder or people that invest in his fund and just in general the Tesla community in educating people on the importance of a PEG ratio. If you have a growth company, you're doing them a disservice by just looking at the PE, and you'll miss it. It's how you miss the Amazons, the Netflix, the Nvidia. So you got to look at growth. Now, Nvidia did surprise on their growth, but the point is Tesla's got a really low PEG ratio. People just again, if you go straight to the PE, it's going to be on the higher end of the mega caps, but it's not going to be the highest, by the way.
Yeah.
But they've got a very low PEG ratio, as like a one or two other companies do.
Yep. So PEG ratio for folks who don't know, I've heard that if it's a 1.0 or less, it's like a no-brainer because the PE ratio divided by the growth of that company over the forward looking, it's like you got to just
Closer to
look at
one
that,
is
and
better. Yeah, right.
closer to one is better. So this is 1.28. This is Nvidia. Nvidia's PEG ratio is at 4 at this point, which is
Right.
nowhere near one. So definitely it's worth their PE ratio is at 222. Woo! Although I keep saying, why do we say woo? When this
The
is
forward
fine.
PE. Yeah, look at
Forward,
the
yeah, the
forward
forward
PE.
P is
Yeah.
only 39. So you know,
Yeah, you can
it's like,
you can flip through these. Yeah, I think the key is there's this movement down. Apple's a little bit higher, I think, than it should be, given its the reason Apple's PEG ratio is higher is because
mhm,
their growth isn't there. They have
mhm,
massive earnings, but the growth isn't there. So that's driving it a little bit higher. I think Meta and Google are in here, um, to look at. But yeah. So Alphabet is in good shape, um, and Meta is kind of is actually trending in the right direction. Um, and they're supposed they're going to go from flat to negative growth to potentially double digit growth back from Meta again. So I think they're actually on a pretty good trajectory. But yeah, these stocks, if you look at all these mega cap stocks, some of them still have a long way to go to get back to their all-time highs. Some of them are at their all-time highs, right? So there's a big difference. Apple and Nvidia are at all-time highs, and they've made new all-time highs. I think Alphabet's within 20%. Tesla is still, you know, what they've got 30, 40, actually more than that to go. They've got to go from where they are today, 260, all the way, I think, to 412. So that's a pretty big climb. They definitely got a bigger move up.
yeah. So Tesla has room to run as far as I'm concerned. Tell me why you think that we saw these six companies skyrocket, but Tesla is went up, but it's not as much as these other guys. Now, it was beaten down. Now, one of my reasons would be that because of the macro and Tesla selling high end assets, a $50,000 car, it is impacted by interest rates and inflation. And so that's one reason I can think of why they're not, as viewed as well as the others. But I also think it's because of just this kind of delay, this delay of this this negative sentiment with Tesla that was hit really hard. I mean, it fell from 400 to 100. None of these guys did that. And so now that the boom is coming back and feeling, people are throwing money back in again, they started throwing it at these other companies that felt more stable until the moment when Tesla then turned, which we all now know happened at the Investors Day, when Elon said, "Hey, we're going to be an AI company." Plus, he also talked about just just so many incredible things happened. And then, of course, when the competitions was becoming more clear that Ford and GM partnered in superchargers and they're not coming because they delayed their forecast to 2030. At that point, the narrative changed and looks like that Tesla's on its way. So I still think that Tesla has a long way to go, will continue to grow, will catch up to these other six. What's your opinion on this? What
It
do
was a
you, you know,
shareholder day to me. I know you said investor. I think you meant shareholder day,
mm,
the May day,
yeah,
the May
yeah,
event. I think that was Elon recommitting himself to the company. Remember the noise coming into that meeting? The noise coming into that meeting was, is he going to step down? Is there going to be another CEO? When are the pricing changes? When are they going to be done? A whole series of them were
right,
price reductions were done in April. So the noise out there was like, is Tesla just going to cut prices till their margins go to zero? So you had like, you didn't know where the bottom was on that. You didn't know where Elon was doing, even though we as I think Tesla bulls, people that are informed, knew that he was not leaving the company. But there were questions even in the Tesla community about it. So you just have those two factors alone that will
mm,
keep a lid on the stock. And the stock was actually, people don't realize this, it was in the 150s
yeah,
in mid May. 150s in mid May. So I think the lid came off when he recommitted himself to the company in the shareholders meeting. And I said recommitted himself to the company. He recommitted that I've got this Twitter CEO in place. I have more time for Tesla. He said it on Twitter. He said it in the meeting. He wants to go after this AI challenge. The meeting was really managed well. I think the shareholders meeting, even the questions from the crowd, even that I think was also driving positive sentiment around advertising, even though we haven't necessarily seen that yet. But the sentiment turned, I think, in that meeting, and then the partnership started. The partnerships, I believe, are starting to be viewed as more of like this. I think there's an analyst from it was RBC, Trojan horse. Use a good word like Trojan horse of like,
hmm,
we're starting this procurement relationship with Tesla. We're starting this partnership with Tesla. They have the best solution in charging. Charging's the infrastructure of EV. And now Tesla is going to be the standard. And is this just a Trojan horse? Like we talked about a couple weeks ago,
yep,
Herbert, the
it
procurement
is.
relationship is built. And
Yep,
now is the next thing battery technology? Is it FSD technology? Is it
yeah,
software? What is that next thing? I think people are starting to realize that there's 5 to 10 year type items available here that they weren't thinking about with Tesla of just being a car. It's not just a car company. And I think that started after these partnerships were cemented. Nobody saw this
yeah.
coming.
Nope. And then nobody saw it coming, although I did. I have a milestones list, and we had a big show on it where I said to you,
Yeah.
I guarantee you there's going to be a legacy OEM partnership by the end of this year.
People just need to watch this channel and they would be much better informed on investing in Tesla.
This is not investment advice. We've been wrong many times. Um,
Yes.
but it's like his world tour almost
Yeah.
feels like daily, weekly. There's one new big giant, country executive, a prime minister or a president that he's shaking hands with. There's these big deals that are happening. Every major company is vying for him. He's on TV now. He's been doing rounds of doing podcasts and TV shows. It was very, very, I don't know the words calculated, but planned and strategic, that he's out there. And it's all been very positive, right? He's been saying things, even though he's been truthful about what he says, but it's been viewed very positively by the community, by the society and the media. So I think that he is able to change the narrative on Tesla being viewed positively. And so I do think that we're at a turning point.
I've often
Yeah.
told
So
people, Herbert, that take those public meetings with heads of
Yeah.
state and
Mhm.
with the heads of major tech and company like Samsung and so forth, and then multiply it by 1,000, because
Mm.
under those layers,
Mhm.
his his VPs of procurement and supply chain, they have 1,000 if all those countries and heads of company are coming to Elon, multiply that by 1,000, where
I
who's
see.
coming to Tesla leadership to do partnerships, to do deals, to work on pricing together. How do we get you guys have the number one selling car in the world. How do we do this? You're working on this bot that Elon says is going to scale to, beyond 5 billion, 8 billion units. How do I become a part of that? So just take those meetings and because I've been in that position, but kind of as the in that leadership position below him, and just multiply it by 1,000. They're beating their doors down.
Okay. Oh gosh. Okay. So I do find it funny that people are going, don't be too optimistic. You guys are like these uber bulls. I feel almost like personally that it's almost the opposite, that you're that you're there's also people who are just too conservative, who won't allow themselves to think that bots are coming earlier than you realize, and they're going, stop that, it's not true. Or or these deals are happening and Tesla's about to make even more deals with partnerships, that's going to happen. Or that Tesla's going to start doing AI, and they're going to start changing that narrative. I mean, the good news is that we have so many to pick from that even if one of them turns true, this isn't just a straight line growth. This is going to be a skyrocket growth. And so I think more and more, I think it's funny that we're talking AI today, we're talking bots today, we're talking like I can see why we're now talking energy and cars, because that is something we can see actually impacting the earnings and revenue. But I think the other things that people kept saying was 10 years away in the future is actually here in the conversation now. It's happening now. So it's getting exciting. And I'm not going to stop myself from getting excited because I do think that this is happening and
Yeah,
it's
we're
real.
not talking about $10,000 price target. We're not doing any of that.
No.
What we're talking about are actually the fundamentals of like what they're doing and what it could turn into. And I think the actual rate of what Tesla is working on and like the number of different areas and things that they're working on has grown, because I've been a shareholder since 2013. And there's these people always talk about these periods of time of holding Tesla stock where it's basically flat. And if you look at what, as shareholders, we knew like in terms of the future of like what they were building and how EVs may scale. But in terms of like, you know, announcements and actual milestones, they were, more fewer and far between. And now it's just like your head spins based on the number of things that they're doing concurrently and the milestones that are occurring, just the scale in EV, just hardware shipments of cars, right? Having the number one model, what the scale in FSD, the fact that I could just press the button from my driveway and go driveway to driveway now, in most cases without intervention. There's still problems, but that we couldn't see that coming even 2 or 3 years ago. So I think now that there's the number of catalysts and the concentration of catalysts that are occurring with the company are pretty dramatic. There's risk out there. We talk about risk. We can probably spend a whole show talking about the various risks out there with macro, not only with macro economy, but the macro auto market. The data in the macro auto market is showing that MSR, the transaction price at the dealer and the MSRP are now coming into equilibrium. But that's for legacy auto. Tesla's already brought that down with bringing their MSRPs down at and below where legacy auto is on ICE. So I think Tesla's been ahead of some of the game in terms of some of these pricing moves. I know a lot of people are looking at it and saying, "Well, the transaction prices are still high through May," but um, th- that's going to continue to tighten up, I think, throughout the year. So there's definitely risks that could occur. There's geopolitical risks that could occur. When I just look at though the number of milestones and what Tesla is doing, and again going back to that AI discussion, and people just don't realize that hardware, silicon, all the way through end product advantage that Tesla has and how comparable they actually are to Nvidia, I think there's just so many catalysts and dislocations available with the company too.
Okay, great. So just recap here. I think we're well positioned. We've seen the other six companies skyrocket much faster than Tesla, which is great news for us. So we've grown as well, but maybe we can catch up to them. The S&P 500 people are now thinking that it's going to be a milder recession. They're forecasting that S&P 500 will rise, which should be rising boat. Tesla should gain. At the same time, we're seeing Tesla continue to have these partnerships, continue to roll out gigafactories. New announcements are coming, the Cybertruck. So let's wrap it up with a few news that happened this weekend. One of them that you thought was very important. I didn't really think it was important, but you had some sort of reason why you did. This guy named Matt Young said, looks like Tesla blocked my server today. Not clear if it was due to the volume of API requests. Anyways, it looks like my site won't be showing any new inventory data. So I guess this guy runs a site that tracks inventory from Tesla, and he used to be able to scrape their server, and now he's been blocked. Why do you think this is important?
A lot of people outside of Tesla look at this information. I think Matt has done a good job creating the website and creating the links to display the information. The problem I've always had with it is not the work that Matt's doing. It's great. It's more of the interpretation of it. And people are just putting factors on the number, saying, "Oh, if it shows 400 cars in inventory, that means you multiply that by 9." Okay. And then, okay, well, and then it's the highest inventory ever. I'm like, well, that's not how you actually track inventory. You ratio it to the days of production or the days of sales. You also have to look at the rate of production. You have to look at the order inflow rate, none of the things that we have access to outside of Tesla. So, why I think it's significant is I think the data has been, for the most part, interpreted incorrectly.
Mhm.
And it's been a useful tool for bears. It's also been a useful tool for bulls at times too. Why I think it's significant is, why did they cut it off? And I've always said, this is just my prediction. This isn't, found in anything. But when you're scaling a business, like I scaled the smartphone business from basically zero, like on the Android side, to where it is today. And again, I'm not all by myself, but there's other companies that were involved. But I was the first, and I saw that business scale from nothing to a billion units a year or more. And during that time, there was these dislocations that occur where you'd have just these massive demand spikes that nobody can understand. I'm not saying
Mhm.
this is happening, but I'm just saying at some point, with the number of production nodes that Tesla has and the number of delivery nodes, the number of regions and places that they're now offering and selling cars to, it's going to be very difficult to actually count what's in inventory, how many have shipped. And I believe at some point there may be this dislocation. I'm not saying it's this quarter or next, but at some point um, there'll be this dislocation where we're just way off in what we predict and where we think the company's going to ship or produce and deliver. And it's going to be, I think, a much larger number given the trajectory of where the company's going. So we'll see. But yeah, I just don't think Tesla wanted access to this kind of information to be kind of just all kind of pulled together at once. I think at some point that may have become a problem for them.
All right. Other news that came out was there's more sightings of the Cybertruck. You can tell this is Cybertruck, right? That
Pretty
sounds
iconic.
looks very it's really iconic. And so now it's in New Zealand. This is the Model 3 New Zealand group reporting that they had this photo. It's arrived in New Zealand. Cold weather testing is what people think it is. And the reason why this might be interesting is that the same thing happened with the Model 3, and when they spotted the Model 3 in New Zealand, it occurred 6 to 7 weeks before customer deliveries. So, what do you think? Looks like Q3 deliveries well on track. I've been saying September, and some people are now pushing it to Q4, but it just feels like everything's on track. What do you think?
Yeah, I think two things. One is I think Tesla Twitter community does a great job like looking at these prior milestones, pulling data together. So hats off to those folks that did that. My take here is that the Cybertruck will have the largest test list. Like they will have the longest in terms of like off-road and cold weather testing. It will probably have the most rigorous
Mhm.
test list to go through. but it's also the most robust design they probably ever put into that test cycle. So you take those two things together, one, very kind of ominous of like probably is the longest list of tests to go through, and then you take the fact that it's designed like a tank, and we'll see. Maybe maybe they'll wash themselves out, and it will be in the August September timeframe. We'll have to see, but it's a good. I've always said when you start seeing more Cybertrucks in the wild in these test cases, you saw the camouflage one last week. When you start seeing more of them in the wild, it's getting very, very close. The rate you see them in the wild, as that increases, the closer it is to production.
Right. Yeah, good reminder that the Cybertruck is a very, very difficult product platform. They've never done it. And Elon has mentioned many times this has brand new thing for them. So yeah, who knows if it's going to be delayed or not, but it looks like we're seeing things. Okay, so we then saw this Berlin Energy reporting that China may introduce NEV support measures soon. This is the electric vehicles that includes both batteries as well as hybrids. And so it looks like there might be more incentives. China State Council Information Office will hold a briefing at 10 a.m. Beijing time on June 21st, which is a couple days from now, promoting the development of the NAV industry. Who knows? Sounds like we're going to wait for that article, but that's good news. They're going to really push it. And they're already so far ahead in terms of their motivating, incenting electric vehicles. And then
Yeah.
the other big. Oh, go ahead. Yeah.
No, I was just gonna say China likes to do this where they kind of like to front run announcements so there's not huge surprise. There's also this thing
Mm,
going on in China now with gas powered vehicles and their subsidies basically potentially going away in July, and basically disincentivizing people to buy ICE vehicles after the certain point in July. It may get extended, we don't know, but it's basically caused a rush on people both producing and buying ICE vehicles. So there's kind of been a little bit of dislocation with NEV and BEV sales under that. So this will be interesting to see like the government come out and say, well, no, you should actually be buying these things, and here's the new incentive package coming out for them.
exactly. It sounds like it's the same timing. So, just for folks who
Yeah,
didn't know, China has been trying to phase out ICE vehicles, gas cars. And so they actually there's rules to increase requirements for ICE cars that was coming out, I think, the first quarter of this year. And so there's temporarily a price war in the ICE cars themselves. They're trying to get rid of their inventory, sell it as much as they can. And so
right.
for temporarily the first 6 months, there was more sales of ICE than there were than usual. And then now it sounds like they're basically get rid of your ICE cars. Let's double down on NEVs. We'll see if that's really the true story or not. All right. One big news I really do want to just bring in before we close up today is the Model Y is now the the U.S. registrations. Model Y is now doubled their U.S. registrations in January to April. It's now America's number one passenger car. We saw that in first quarter, and now naturally the best-selling vehicle in the U.S. Second only to the F-150 as best-selling vehicle in the U.S. What was it here? There's a point I wanted to say. Yeah. Okay. So second. So they're continuing their dominance as we already seen. So this is not just a blip. This looks like it's ongoing. This is the one. This is the one I wanted to say. The U.S. is now the second largest EV market behind China. Used to be Europe. So and that's because of the tax credits. So U.S. was behind in their tax credits. They finally caught up to what China and Europe are doing, and so now U.S. is the second largest. So you routinely lagged behind Europe and other regions in EV adoption, but no longer. Estimates that American EV sales jumped 79% year over year in the first quarter of 2023, helping it move past Germany to become the world's second largest electric car market. Only China is larger. And then the tax credits, obviously, it's doing that. And as you've been saying, Jeff, you've been saying quite a bit, the tax credits are kind of like it's helping, but it's actually is not because people can't get that money until the following tax year. But you've been pointing out that every month that goes by, you're getting closer and closer to the tax April. And so if I'm going to buy a car in September, hey, I'm going to go ahead because I know that I'll get that money back in just a few months versus like, earlier this year, it was going to take a whole year kind of thing. So
Mhm.
that's a good observation. And then, like you said, as of January of 2024, it will just be right off the MSRP price. So people don't need to even wait for it. It'll be like truly
And
cheaper. And so
the state incentives are ramping up too.
And the state incentives are wrapping up as well. So, okay. Anyways, thank you, Jeff. That was fantastic. Appreciate your time. You're just great. I can ask you a question. You know the answer. You give good analysis of things I hadn't known. Thank you very much, Jeff. Appreciate it.
Great to be with you.
Thanks, everybody. Bye-bye.
See ya.